Welcome back to Palisade Radio. I'm your host, Tom Bodrovics, and joining me today is Jeb Handwerger from goldstocktrades.com. How are you today, Jeb?
Hey, Tom. Thanks for having me on the show today. It's exciting to be here. It's a great time for gold, and we've just seen uranium pick up, so I'm really excited to have this discussion. Lots of new investors coming into this space. Really important to get out some timely advice and wisdom.
As we've seen, gold hit 1,700 this week and pull back a little bit. Do you think this is a little bit of a consolidation before we move higher?
Well, you know, we've seen something very the past few weeks has been extremely volatile. It's been historic. We haven't seen anything like this in maybe 100 years. But if people have been following my Twitter, which I ask everyone who's listening, first thing, sign up. Twitter is the best way to get out timely information right now. If you're following the markets, my handle is @goldstocktrades. I've been sending out charts for the past 8 months about the stock market topping, about the bearish megaphone pattern. There's been a lot of signs that the Fed has had to start lowering rates, the repo involvement in the repo market long before this coronavirus hit and began happening in China. So we have been very concerned about the insider selling of major S&P 500 stocks, indicating a top. The technical patterns. There were so many signs that preservation of capital was the key for investors. How good does it feel now when you see the carnage? Investors have been down 70% in the REIT stocks, in the you can never imagine this, but we who have been following, investors who have been following have cash, have gold, have hard assets, precious metals miners, some of the top performing junior mining companies, because we do our homework and find good people with good assets. So we have to be extremely grateful now and have an attitude of gratitude and pray for all those that are suffering now with this illness and that are suffering financially. But I'm glad that I helped protect myself, my family, my friends, people that have followed me on the news, in the newsletter. Breakout in gold's here at 1,700. It just hit today, last week. Okay, it's going to have some profit taking along the way. That's normal. You're not going to go up every day. We don't want that. We don't want the gold price to go parabolic. You want buyers and sellers. But it looks like a breakout of an inverse head and shoulders with the neckline at 1,700, at the bottom at 1,450. Can see that video. A lot of people have seen that video. I have almost 21,000 views on that technical video. Our next move could be to new record highs at 1950, possibly 2,000 gold this summer. So it's an extremely exciting time. We saw a sell-off in gold the past few weeks. There was margin calls. There was hedge funds going under. There was panic, the shakeout before the breakout. This is what gold does. Gold first goes through a shakeout, gets rid of all the weak hands, the newcomers, the guys that were trading weed stocks and crypto stocks, and now they're coming in to pick some gold stocks. Let's shake them all out, and then we have the breakout. That's what we're seeing right now, Tom.
Absolutely. I think it's going to be a healthy indicator for this sector. Before the call, we were talking about having patience and fortitude to make it through the market that we've seen for the past couple of years. You want to elaborate on that a little bit more, Jeb?
Well, one of the first things that my teachers taught me, including my father, who was an investor for over maybe 70 years in the junior mining market, the most important thing, especially with the teachers from the World War II generation, that they taught about the two things that are most needed. You got to be able to be wrong for a while and be able to have patience. And you got to also have the fortitude and to be wrong. And it's not easy for a lot of people. And, we made this choice, long before the markets did what it has just done. to be wrong, because we knew that eventually we'll be right. And you're never going to catch the top. You're never going to catch the bottom. The only people, as Bernard Baruch taught, the only people who catch the top and the bottom are liars and con artists. Okay? Those are the only people. There's no one who catches the top and bottom. But you have to be able, as a market's topping, before it tops, you have to be able to have that fortitude to be wrong and to position in a sector that's also wrong. So, if you're going into investing as a popularity contest, that's not what it is. If you're going to follow the flavor of the day, be careful. How much over the past couple of years I've seen good investors from my newsletter get caught up in crypto scams, or unfortunately get caught up with these cannabis promotions where there was all these insider shady dealings, and now these companies are going bankrupt after having billion-dollar valuations. And who's winning from that? No one. There's a lot of people. The only people that won were these early promoters. But the patients, the medical marijuana community hasn't benefited, and the shareholders that have believed in the future have not benefited. So we've seen a huge wipeout, and this was at a time back in 2018, when there was a record short position in gold, and when Vanguard got out of the gold business, and when Macquarie closed up shop in Canada and mining, that all these guys were leaving the mining business and going into the flavor of the day, cannabis, crypto. And I wrote an article back then that this is going to come back to haunt you. But now they're coming back to gold. This record short position in gold back in 2018. Now we're seeing, since that time, record inflow of gold and a record outflow from the stock market and treasuries. You need to really have patience. You need to have strength. And it's not just little guys that got caught up in this, the little retail guys. These are some of the biggest investors and some of the most famous names in our sector got caught up in these cannabis and crypto scams. So we can't ever lose our guard, and we need to stay patient and fortitude. I decided when gold topped in 2000, I had a newsletter I started in the bottom of the 2008, 2009. We had an unbelievable growth up until gold topped in 1900, in 2011, 2012. And then, we've had this mid-cycle correction for almost 8 years now. So I decided, yes, when this chart started breaking down in 2012, it was hard. But I said, you know what? I'm not going to give it up on mining, because I know the long-term cycle, we're just going to go through a mid-cycle correction. I didn't think it would last 8 years. I thought maybe 2, 3, 4 years at the most. 8 years was a little bit much. This has been the longest. And, Palisade put out that chart that everyone's sharing of how long and how deep this bear market is. Tom, do you know about that chart, that the last article that the Palisade came out with, where it shows the bull markets and the bear markets, and the length and I
believe it was a 1,200 day, something like that, bear market.
Right. And, that's one of the concepts I've always discussed, and maybe Colin, and Palisade discussed. The bigger the base, the bigger the breakout. That's a basic technical, and we have to understand, 8-year base. Well, we're seeing this breakout in gold, and you take a look at some of the long-term charts, and I know a lot of the young guys, they don't look at long-term charts, but when I was coming up in the business and I would study with the brokers and the Wall Street analysts from World War II, they would show me weekly and monthly charts. So those are the old-time mining investors. They look at the weekly charts and the monthly charts. And you're looking now at this gold breakout on the weekly chart, on the monthly chart. It's huge. And, It's something that we could see, like we saw, from 1970 to 1980, gold went up from $35 to $900, and from 2000 to 2011, it went from $250 to $1,900. So who's to say now, and with this breakout, we can't see another third wave higher, which is just looking at history. Gold is an upward long-term secular trend. And that's why we decided to stick through it. That's why I was taught by people that had patience, people that had fortitude, and that's why I decided to stay in mining and to wait for this next breakout, which I believe we saw the beginning of that last summer where we broke 1,400. That was the first major breakout. Now we're seeing the next level, 1,700. The next, we're going to 2,000 plus. And this is going to bring the junior miners, which are historically undervalued by any means, way below the average. They're going to finally have their day again. And they're going to outperform on the upside. Now look at the gold to silver ratio. You've never seen a gold to silver ratio like this historically. It's like 115 to 1. It's, silver's like the junior miners. There's so much fear right now. But eventually, when the gold market stays in there, because the real money looks at weekly and monthly charts, when the long-term averages start keeping on tracking higher, that's when silver is going to come up, which was a laggard, is going to catch up and explode on the upside, much higher than gold in performance-wise. And then the junior miners, which are lagging as gold is picking up, they're going to also do a slingshot, like a coiled spring, and go parabolic one day, and the stocks will go from pennies to dollars to maybe tens of dollars. So investors need to be patient right now. And we're beginning to see the money coming back into the sector. But don't get caught up with the latest flavors of the day. Stick with people that have learned the sector, that have paid their dues, and because it's a lot of homework. You got to learn so much in exploration, geology, engineering, permitting, community relations, jurisdictional risk. There are so many risks involved in mining, but that's where the reward comes. You want to get into it. It's a tough business. It's one of the toughest business. It's like climbing a mountain. Anything could go wrong, could take you, climbing Mount Everest. Any little thing could cause disaster for a mine. So it requires a lot of work, a lot of homework, and stick to people that have been doing this and learning the mining investing game and have been through the up and down cycle.
Of course, you're at goldstocktrades on Twitter. And as you're talking about exciting things to see here, we've seen uranium hit a new high since 2016. Could you tell us a little bit about how that market is shaping up as well?
Well, I was a very big uranium bull in the last cycle, and was able to experience the 2007 uranium bull market after the Cigar Lake shutdown. Then we had the credit crisis, so all the stocks got crashed again. And then, we had another big run in uranium up until the Fukushima disaster in March of 2011. And that really began the cascade of the venture exchange during this, black swan event. So very similar to what we've seen recently with this coronavirus pandemic in 2011. We had this Fukushima, this earthquake that came out of nowhere. And, there's one reactor in Japan. They didn't build enough. It was all these errors and it destroyed the nuclear market for now 9 years. Now with this coronavirus, we hear Cigar Lake being shut down. We're hearing Kazakhstan being shut down. And we've seen the uranium price, which was hitting a new low back in March, I don't know, maybe 20, even below $20, now has had a huge explosive move, like a hockey stick sort of move. So yes, uranium's right now it's a little bit overbought because it's had this huge move from record lows to to new highs in less than 2-3 weeks. So we may see a little bit of a pullback or overbought, but this is a sector that's been beaten down for so many years, and they're still building nuclear reactors in China. There's such a demand for clean energy and to move away from fossil fuels. So, this is an exciting market that I haven't seen uranium in 9 years. So looking at the long-term charts on Cameco could be a turning point. So, yeah, it's an exciting time for uranium as well. And
on your Twitter, I was recently also reading about the cobalt breakout and EV demand in Europe. Could you tell us a little bit about that, and if you think that demand going forward after this big long shutdown is still going to be there for EVs, or if people are just going to kind of hunker down and drive what they have?
It's a good question. The reality is that the electrification of the automobile is something that's happening. The big companies are making this transition. Will this coronavirus slow it down? Right now, in the midst of it, I don't see people driving much. I haven't started my car in maybe 4 weeks, but there's been a lot of stimulus money that's come out recently. And I think maybe when things start coming back, that these car companies will say, you know what, I need to get a secure supply of these battery metals, and I can't rely on China again and then be stuck in another situation like this. We need a secure supply of cobalt, of lithium, of nickel, graphite right here in the U.S. And I think that's going to be sort of transition. Is stocks like Tesla overvalued? I would say I wouldn't. It's unaffordable. I would look for, what does Tesla need? They need better batteries, and they need better battery materials, or better source of those battery materials, hopefully in North America. I think a cobalt's going to make a comeback. I think lithium's going to make a comeback. I think nickel's going to make a comeback, and the base metals will make a comeback. There's been all this stimulus money. There's going to be an infrastructure bill that Trump is talking about, a $2 trillion infrastructure bill. Yeah, Tom, I think that it's a time that we really should think about electrification, and really we need to think about our grid too. No one talks about this. Our grid is like 50 years old, and it's antiquated. We need to, this infrastructure bill in the U.S. is going to be, we need to update the grid, we need to update our infrastructure, and we need for these car companies to think of local secure supply, not just relying on China to do everything.
Absolutely. It seems like we need to have some safety in our supply chains closer to home, instead of, like you say, relying so much elsewhere.
Rare earths too. Don't forget rare earths, Tom. Yeah. Investors shouldn't, that's going to pick up. I heard Energy Fuels is just made an announcement that they're trying to get into the rare earth business, one of the big uranium mills in the U.S. So investors should look into that. I haven't really heard the call yet because it's been Passover, but I'm going to probably listen to that today or this weekend about the uranium companies getting involved in rare earths, because that's another, it's not just uranium. Uranium, the supply comes from mostly Russia, and we import it, most of it. And we have tons of uranium here in the U.S. Or rare earths. We've been importing it for 30 years, 40 years from China. We're the ones that invented rare earths and have rare earth mines here in the U.S., the top rare earth mines. So my question to investors is, how much longer is this coronavirus going to wake up investors and say, hey, doesn't make sense that China's making everything and making all the profit when this is our industries? These are our industries we created, and we have no manufacturing jobs. We have no mining. We have no processing jobs. It's these investors going to rethink that. And the infrastructure bill is going to help with that. And I hope that investors and the public realizes that we can't rely on China for everything.
I couldn't agree more, Jeb. As we're seeing oil drop precipitously more and more here, do you think that we need to secure some better supply of oil as well?
Well, the oil thing is a much deeper issue. We were finally independent in oil and gas in the U.S. And now all of a sudden, as soon as we got independent, the Saudis and the Russians, who are supposed to be our allies, have undercut our complete oil and gas industry. So, and just flooding the market during this coronavirus when people aren't driving. What I think that means is for gold producers, this is going to be a huge profit for free cash flow for the gold producers. It's going to be, a huge benefit. For investors in the oil stocks, I'm looking, it's going to take time, and I'm not 100% sure, if that's where investors see, if I see the future growth like I see in clean energy and in nuclear. But there's going to be, some of these names are trading at ridiculously low valuations, but there's going to be a lot of bankruptcies. So it's a distressed area. You got to really be careful investing, because a lot of those names they're highly leveraged and have a lot of debt. And I have a feeling there's going to be a bunch of bankruptcies in the oil and gas, and that's going to affect the banks. But, if we're in gold and in the mining stocks, big cost is energy costs. So that's going to benefit us.
Makes a lot of sense to be hopefully where we are. Any concluding thoughts as we wrap up, Jeb?
Well, we have to be grateful that we made it to this time and that we're all healthy. I hope that everyone that needs a recovery, gets a complete recovery, from this coronavirus. I hope that people can get back to work. The bread lines and the unemployment lines, it's just so painful to watch this. And I hope that they should make it through this time. First of all, the government's going to keep on, sending out the stimulus and record low interest rates. This is going to be all good for gold. It might be good to get a little bit of silver and gold and start looking, if you want to get, recommend to a younger generation, what should you look to go into? Maybe mining's a good area. Mining might be the good time for investors. The general stock market has been really overbought for 10 years. There's going to be a lot more pain. I don't think that we're through it yet. There was a lot of underlying things before that. But anyway, stay tuned. Go to my website, goldstocktrades.com. Look me up on Twitter at goldstocktrades. You can always send me a message. Thank you, Tom, for being here, and hopefully we'll have an update soon. I think there's a lot of great stories happening right now. Nevada, the gold miners are picking up. The gold sector is really, and the uranium sector, and, being in metals is a good place to be. So I think we'll have a lot more in the next couple of weeks.
Absolutely. Thanks, Jeb. We'll have you back for an update soon. If anybody has any questions or comments, please email them to me at tom@palisaderadio.com. Jeb, thanks for your time today.
Thanks, Tom.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?